Fintechs have used technology and innovation to deliver financial services to the underserved and unserved markets, leading to disruptions across the financial services industry. There has been a significant growth in the fintech sector in India, driven by a substantial unmet customer demand and rapid technological adoption. Strategic moves by the government and regulators to create technology trails such as GST, TREADS, account aggregator framework have further facilitated this growth. Fintech startups can be classified into five key categories: payments, digital lending, wealth tech, insurtech, neobanks, and enabling tech. Each of these segments have fared differently during COVID, but eventually most of these have turned around and attracted significant investor interest. To talk about the India fintech opportunity, we have with us today Ganesh Rangaswamy, founding partner, Kuona Capital, a global fintech fund. Thanks, Ganesh, for coming to our show. You have been watching and investing into the fintech sector for over a number of years. Could you provide an overview about the attractiveness of the current market?
Thanks, Amit, for having me. Where we believe the future is headed is a lot more contextual finance. And through the digital rails, various technology rails, open financial services solutions, etc., being developed, we believe more and more financial solutions will be developed, will be delivered in a non-financial services context, and essentially will enable everyday life cycle needs, whether in education, healthcare, supply chain, retail, commerce, agri, so on and so forth, a lot more effectively. And we also believe that with the maturity of fintech innovation, we are going to see a wave of rebundling of financial services by the more dominant platforms in respective markets, which will become super apps. And in that sense, we are going to see resurgence of more holistic and integrated banking in the form of digital banks.
Thank you, Ganesh. In your years of investing, you would have seen valuations of fintech companies vary, and expectations in the current market is high. What would be your perspectives on valuing companies at different stages, say from Series A, growth capital, or say even pre-IPO?
Valuations, Amit, are a delicate balance of science and art, and in the last decade or so, it's become more so because of the rapidly evolving and very dynamic fintech ecosystem. Maybe about a decade ago, we would have seen a lot more modest Series A's than we see today. What used to be Series B about a decade ago has become Series A now. So the general rule of thumb we see in market nowadays is, Series A rounds could be low double digits, could be a 10 to 12 to even $15 million rounds. Series B rounds could be 20 to 25 million. And usually dilution for Series A might be in the 20% range, 20-25% range. And Series Bs are similar, but frankly, a lot of it depends on obviously how exciting the opportunity is and the promise and expectation that the investors see in the opportunity. When it comes to later stage companies and pre-IPO, I think given the ability to stay private for longer due to the availability of capital, or lot more availability of capital today, I think we at least get to $1 billion valuation or a couple of $1 billion. And by the time companies go public, what we are seeing a lot more consistently now is they get to let's say mid single digit billions up to low double digit billions in valuation.
From your perspective, what would be some of the characteristics which investors look at when evaluating investments into fintech companies?
So, Amit, aside from the usual characteristics that investors look for in entrepreneurs and early stage companies, like large market opportunities or phenomenal team, innovative business models, so on and so forth, some of the specifics we look for are the following. And number one, it's very important for us to understand if an entrepreneur has a good understanding of the context of in which they are solving for the specific use case they're going after, whether it's the regulatory understanding, compliance understanding, and an understanding of how that particular financial services problem has been addressed in the past. So we have to understand the system well to be able to transform or change it. Secondly, we are probably looking for entrepreneurs who have a phenomenal ability to attract talent, and talent which understands the problem they're going after in a very in-depth way. And we believe that those entrepreneurs can really tease out the problem at a very detailed level and be able to deliver to their vision. Third is their ability to attract ecosystem partners. Of course, depending on solution, that could be various different players in the ecosystem. But effectively being able to attract some of the most well-known ecosystem partners to be able to work with them would also be a very, very important sign. And lastly, I think we look for an entrepreneur's ability to really go beyond the macro and to depths of the problem. One of the examples I use most often is everyone talks about how SME credit is a massive gap in India, and hence we're going to start a company that will address that. Now, in reality, SME credit is not one monolithic generic issue. It could involve vendor financing, purchase order financing, invoice financing, working capital, supply chain credit, so on and so forth. And each of this would have to be solved in a different way if one wants to create each. And each of these are large opportunities, but they will have to be solved in different ways depending on which one an entrepreneur wants to go after.
Thanks, Ganesh. That was insightful. What's your view on the role of public-private partnership in developing the fintech ecosystem in India?
Thanks, Amit. I think the question on public-private partnership is a very pertinent one, especially because when it comes to financial services, we have to build a foundation to be able to enable smooth delivery of services and effective delivery of services at scale and across different kinds of use cases, for which the evolution of soft infrastructure is very important. And that's really the key role of public-private partnership. I think we have seen phenomenal success in India with, of course, with UPI, with NPCI, and with the account aggregator framework and few other things which are in the pipeline. And that's really helped set the tone right. A few things which we can probably evolve further on as we move forward is, firstly, to be able to drive stability in these frameworks, to drive greater adoption and better understanding in the ecosystem of these frameworks to drive that adoption. Secondly, we can also evolve and drive more clarity in the roles of the public side of the framework versus the private side of the framework, which also helps understand both sides, what their respective roles are and how they can coexist to be able to drive this solution. And finally, taking cues from the PPPs on credit and payment side, I think we have great opportunities in other use cases as well, like insurance and investments, where I believe that certainly a public-private partnership will help drive maturity of the ecosystem and interoperable use cases and help consumers and SMEs overall digitize and build financial assets in a more meaningful way.
Ganesh, the fintech startups in India have scaled very rapidly. What opportunities do you see for them expand into global markets?
Yes, Amit, the globalization of fintech, I think, is clearly one of the biggest themes we are seeing around the world, and it's a benchmark for other sectors as well, to see how we are seeing cross-border proliferation of fintech ideas. So in terms of global opportunities, which we hope to see more of in India, are digi-banking is one of the big themes. Even though we have seen a lot of new age neobanks or digitally oriented banking startups in the country, we do not have a path yet to creating a true digibank, which means a licensed entity, an entity blessed by RBI, which can provide holistic digital experience on the banking side across the board, from accounts to cards to payments to credit. We typically look at it in two different ways. There are verticalized solutions in India, and then there are horizontal solutions. I think horizontal solutions are typically full stack. It could be sort of a full stack insurance company, a full stack lending company, so on and so forth, which usually are not easy enough to replicate, market to market, unless we have a specialized differentiation, which the market is looking for. Whereas vertical solutions are definitely more transferable. For example, we are starting to see some very interesting opportunities in cross-border financial services in India. And cross-border by nature means that you obviously are it's going to be multi-country. But these companies are starting with India as the anchor, and it's for cross-border out of India. And what we believe is, as they master this cross-border banking or cross-border trade finance or cross-border payment solutions, they will be able to take this to other markets where similar kind of cross-border use cases exist. It could be Philippines, it could be Mexico, so on and so forth, where it would make a lot more sense. So those are the two examples I would do. I would give to kind of think about exporting ideas out of India.
Very interesting conversation, Ganesh. Thanks to our viewers for joining us today. Stay tuned for more episodes from Startup Perspectives.